Hang on.
Good morning, everyone. We have Raymond Gibbons from BMS Accountants today doing our presentation. And Raymond, all yours.
Many thanks, Amit. Many thanks, Alec. And good morning, everyone. Yes, Raymond Gibbons from BMS Accountants in Navan, and I am looking forward to the weekend, regardless of being in work on Monday. Today's presentation is Improved Business Processes, Improved Business Performance. And I'm assuming everybody can hear me okay. So I just want to tidy up the screen here because we're missing a little bit of information on it. Yeah, there we go. Now, firstly, though, we want to talk about the importance of quality information. And the textbooks will tell us, again, we're having problems with the cursor here, Amit. It's not working for me, guys.
We can see your cursor on the screen.
Yeah, but it's not. It's not. Now here we go. So the textbooks will tell us. Hopefully, it'll improve. That the quality information will help you communicate business performance to key stakeholders, be that revenue, business partners, employees, what have you, lenders, and it'll help you review and improve existing processes, point you in the direction of processes that aren't doing so well to make improvements, and processes that are doing well. It'll also help you support decision-making, be that day-to-day or strategic. And they are correct, except for one thing, and that's the average business owner. Been in business now quite a number of years, and what I find is that most business owners want to talk about what their profit and income tax, corporation tax liability is. How do I reduce that tax liability? And what are my monthly or bi-monthly tax liabilities? Because they're only really interested in how to cash flow those particular liabilities. And we tend to review accounts 6 to 9 months after the financial year end at best, with very little attention paid to actual business performance. And for some reason, the focus is almost always tax, tax, tax. And I really think as business owners, we've got to move away from that and be looking at how the business's performance and the consequences of driving down profits later on. So for the group here, I'd like you to consider the following. If today you had to apply for a business or a personal loan, or if you were lucky enough to get a phone call from a third party who expressed an interest in buying your business, do you have the information on hand to manage either of these scenarios? Can you answer the necessary questions? And if the answer is no, we need to ask ourselves why not, because processes matter. Your processes will dictate the quality and timeliness of the information available about your business, and your attitude to business will dictate the quality of your processes. And what I mean by that is this: if you're running a business and at the end of your financial year, you gather up all the data 3, 4, 5 months later, hand it into your accountant so that they can prepare your accounts and income tax returns, your processes will be geared towards that. On the other hand, if you're the type of business owner that sets metrics, targets, goals, and objectives, your processes will be geared towards that. Processes matter because they help us remove inefficiencies. So we have a touch once policy here in the practice. It's not a stick to beat people with. It's about, if I'm handing my file over to a colleague to work on, I should have done my job correctly. And if they find that there's errors in my work, they hand the file back to me to correct. There's a standardization of tasks that come about because of good processes. So for us, bookkeeping and purchase invoices, sales invoices, banks, that's generic. We have systems in place that we follow to ensure everybody's singing off the same hymn sheet. So there's a common purpose and goal day to day, month to month, quarter to quarter. It helps us by reviewing processes, replace systems that serve no purpose. And it will also ensure there's a greater focus on what drives business growth. It helps improve communication to staff. It also, a great thing, we just took on a new employee last week, and because the processes are documented, it means that the training is improved, the training is easier, and that new member staff knows exactly what's expected of them. And it helps us to identify key financial information. So just a few other questions to consider. When we have a prospective client sitting in front of us here that we're hoping to sign up, we do ask basic questions to see what their understanding of their business is. And I'd like you guys, without actually coming back with answers, to consider, do you know what are your year-to-date sales right now? Do you know what your gross margin is? Do you know what your current bank balance is? Do you know what your short-term cash flow projections are? It's March. If you're registered for VAT, you should know your VAT liability now. You should have known it earlier, and it shouldn't be a shock to you when your accountant comes to file it or you come to file it. How much do your customers owe you, and how old is the debt? And then think of those questions in relation to 2024. Could you answer all of the above questions in relation to 24? How long would it take you to get this information if it's not to hand? And would you need to contact your accountant? So to sum up the previous slide, and if I'm speaking a bit quickly, there's a number of slides to go through, so forgive me. But to sum up the previous slide, there are two questions really. How is my business currently performing? And how readily available is the information about business performance? Because remember, it's your business, not your accountant's. And you should know the answers before them. Your accountant should be merely confirming what you already know about your business. So this is to do with the information gap and what you can do about it. And the information gap is really that if I'm looking for critical pieces of information about my business, my processes may not be giving me that information in a timely manner. So what can I do to correct that? So review your existing processes. Are they fit for purpose? Do you operate a manual bookkeeping system, or is it a hybrid model? That might be where you have an automated sales system using Wave, Zoho, or Square to generate invoices. You have a shoebox of receipts sitting in the corner. You send it to your accountant every 2 months for VAT returns. Do you operate a cloud-based account system? And if so, how often do you update it, and how accurate is it? Does your accountant engage with you to make recommendations on how you can improve what you're doing? Start with the basics. So what we're looking to get to know here is we're trying to build an information system for your business by improving the processes. So ask yourself a question. What information is critical to your business? Make a list of both the financial and non-financial information that you require. Start small, prioritize that list, and consider just 2 or 3 pieces of critical information and master how you're getting that information. Don't take on too much because it'll become overwhelming and you'll drop the project. The best thing you can do is look at 2 or 3 pieces of information, decide what you need, how you're going to get it, and master how you do get that information before you move on to any other sections of your business. And so for today, we're going to talk about 3 pieces of critical information, and they are sales, gross margin, and VAT. And I just have a few slides just to show, hopefully show you what I mean here. So basics, sales. How up to date are your sales? How often do you invoice? Go back to Denise's very good, excellent presentation last week. If you don't invoice straight away when a job is complete, if you delay your invoicing, you're delaying getting paid. The longer you delay to get paid, the more chance there is of a bad debt occurring. That's all down to a bad invoice process. Are your receipts up to date? If you're not posting your banks on a regular basis, how do you know what your customers owe you? How do you know how much or how old the debt is? Do you issue statements to your customers? Who are your key customers? And how often do you engage with key customers? So we have a process here that if we do a particular project for a client, let's say we prepare budgets or business plan, we go back maybe 3, 4, 5 weeks later and we ask the client, how did they get on? Did that actually work for them? Because we want feedback. And if it has worked for them, we might get new business out of them. Keeping with the basics in sales, the real question is, what information do you need that you don't currently have? And that is the information gap. So how are you currently recording your sales data? Manual systems are fine if you stay on top of the paperwork. Automated is better. You issue invoices immediately. You have up-to-date customer accounts. You can issue statements. You get paid more promptly, and you've got good information. If your IT skills aren't great, upskill, train. If you can use a smartphone, you can use most invoicing apps. Invest in cloud accounting, but I wouldn't do that unless I spoke to my accountant first and make sure that you get their input onto what software they might recommend for you. Again, keeping with the basics, gross margin. Do you know what your gross margin and gross margin percentage is? Can you actually calculate it? Do you know what costs to include in your cost of sales? How are you recording your costs? Is it a shoebox to the accountant or are you in control? How often do you carry out stock takes? Because if you have a business that carries stock, we find that a lot of businesses are carrying old stock that's tying up a lot of cash. And ask yourself the question, how often do you have dependable information about your business performance? Again, keeping with the basics and VAT liabilities. I'm making an assumption here that you all prepare your own VAT returns. So at this stage, the liability should be known and it should not be a shock come file and pay. Do you know your effective VAT rate? Do you know what an effective VAT rate is and how it can actually help you with your cash flow? Because effectively, if you pardon the pun, if you know your effective VAT rate, with every euro of sales, you can estimate your VAT liability. Liabilities might fluctuate depending on sales. So we'd have clients who run clothing shops, for example, and they'll buy seasonal garments, and that means in a particular period the VAT might be down on their normal VAT liability. But in general, if we look for trends in business to see what's the effective VAT rate, to see whether or not we're getting all of the information over from the client on a regular basis. So fluctuations in the effective VAT rate on a regular basis can indicate there's other issues there with getting complete information from clients. Review and improve your processes and put yourself in control of your business. That's what that has all been about. Going over your processes, looking at what's working and what's not working, and how you can streamline them to ensure your business is performing to and meeting your requirements. I want to share with you a real life case study. This is a client of mine, and he'll remain nameless, but he has given me permission to share this story because he was so happy with the transformation to his business. And the business was a sole trader operation. And at the time we were doing this, the turnover was 540,000 approximately, and it was growing year on year, constantly growing turnover, no issue with sales. High-end product, large volume of transactions, between 3.5 minimum thousand transactions per annum and sometimes more. Biannual VAT returns. And by this, I mean that his bookkeeping was prepared as follows. He would have VAT returns to file in July and January. He would give us the bookkeeping in July for Jan to June and the bookkeeping in January for July to December. Huge amount of work to be done. And we weren't getting that information off him until maybe 2 weeks into July and 2 weeks into January. So we were pinned to the collar to try and get the actual VAT returns filed for him. And that was the priority every time, to keep revenue off his back, as it were. It was a completely manual system. In fairness to the owner, he did have a reasonable handle on sales. But overstocking was an issue and an expensive one because he didn't have time to focus in these areas. And there was a huge amount of cash tied up in stock that was in danger of going obsolete. So cash flow was extremely tight as a result. He had large VAT bills every 6 months, and he was constantly chasing sales just to pay his VAT bill. He had limited control and knowledge of margins, and he would ignore key costs. So he had a team of fitters. And when he was selling a product to a customer, he was most times putting in a contribution of the fitting, the cost of his fitters to pay for fitting the product into a home. But he wasn't covering his entire cost, which was the objective when he was making the sale. So he was ignoring these costs, and his pricing did not reflect costs correctly. And more often than not, he was given a discount on his product before even taking into account the full cost of installing the equipment. And performance reviews happened post-year end, probably around July, August, when we were doing the first VAT return for the new year, if you follow me. So the information was very poor. Large volume of work, as I said, little time to review results, poor processes, poor information, poor results, and he was getting a poor service from us because we could do no more for him except just keep revenue away and just meet his basic needs. He also had a fear of automation. Too much work taking on a new system. He felt he was too old school for a new system. He liked doing it manually. He was flat out busy. A really nice man, really potentially good business, not making money, and could not understand why. The answers to us was straightforward, but it took a while to convince him to make the changes that were going to make his business that bit more successful. We had a number, and I say I had a number of meetings with him first, and then we brought our own staff in to help. And we assured him that we'd taken him and his team by the hand and implement a cloud-based account system that would at least start getting him back in control of his business. The very first thing we did was, when we introduced it, was to be able to show his staff how they could actually invoice customers and raise quotes and raised estimates on their phones and email them straight away, instead of doing up manual documents. We helped him to upload a stock file into the system where we put in the recommended retail prices and cost prices. And we were able to structure the fitting costs in such a way that if he had a customer who was 100 kilometers away, we would charge additional fitting costs because the fitters could do less work in a week, and we were trying to recover those costs. If he wanted to offer a discount, at least now he had full visual on the sales and the costs involved in that particular sale. So he was able to offer discounts and know the impact it was having on profitability. We linked his banks so that receipts and payments were automatically updated daily. We got him to use a system called Dext, which was an app for importing purchases and expenses into the account system. He had a dedicated account manager, but instead of reviewing everything 6 months out, she was now reviewing everything daily. And that's what was transformational. He now had daily visibility on business performance, not every 6 months. After a while, he got so confident with it, he realized that what he was getting back was time. And now he had time for regular stock takes. And we did this with him. We had a full stock take again, and we identified a lot of slow-moving stock that was in danger of becoming obsolete. And we were able to offload that and generate much-needed cash into his business. There was an immediate improvement in profitability. His margins now, where he thought he was getting 30, 33%, he was probably only getting 25, 27, 28% margin. And on that turnover, it was significant. But now he could see his margin, and he could see the improvement in his margins and improvement in profitability as a result. Monthly management accounts, he was getting them 3-4 days after his month end. There's this aspirational thing of having 6 monthly management accounts was irrelevant. Now we were getting monthly figures, we were getting daily figures. Improved accuracy and timeliness meant he was getting meaningful information about his business. And to sum it up, improved processes, improved performance, improved profitability, and one very, very happy client. So in conclusion, and yes, I do like to hear myself talk when I give them before anybody cracks a joke. But anyway, what I've tried to demonstrate today is that by identifying what information is important to you about running your business, you can get back in control of your business. You have to ask yourself how readily available the information is. Are you often frustrated that it's not at your fingertips? Review how you're doing things and ask why. Start to make small changes to access critical information. Make continuous changes and watch as you regain control of your business. Gur míle mágah, seachtain na Gaeilge is Mr. Raymond Muckabun. Slán.
Thanks for that, Raymond. And that was very good. I bet there's a good few small business owners who don't know the answers to those questions.